Hello and good afternoon, everyone. It is Matthew Mocorro. We just had a small audio glitch, but looks like I've got everything dialed back in here. So looking forward to meeting with each and every one of you today, and we're going to make this as interactive as possible. I'm going to do things a little differently than what you'll see in most presentations. I like to teach. I like to give away as much information as I can so you all can walk away with actionable, applicable trading strategy. All right, so we're going to be leveraging a lot of the math of trading, and we're excited to bring that to you. Effectively, I'm going to be giving you a step-by-step guide of how to identify the next potential breakout, be it bullish, be it bearish, so that way you can be independently going after your goals in the financial market, right? And so that's how I like to frame these events. I'm going to be going into lots of charts, and I always enjoy doing that. So if there's any questions at any time, I encourage you to ask them so that way we can maximize each other's time today. Now I'll be sharing my webcam as well so you can put a face to the voice. Typically I'm down in Orlando, Florida is where I hold my residence per se, right? It's where I spend the majority of my time, is in the great state of Florida, in my opinion at least. But I am up here on a little business / pleasure trip up in the great Northwest. All right, so before we do that, let's just make sure everything's working exactly as it should. On the screen in front of you, you should now see a slide that says sound check. That is how we're just going to make sure you understand how to utilize GoToWebinar. If this is the first time you've used GoToWebinar, I want to make sure that you have at least a brief walkthrough. I'm not going to try to make you a master GoToWebinar user. I do want to make sure that you have all of the information in front of you. All right, so effectively what we're going to be doing is using the bottom section of the control panel that is known as the question section. It is a simple process to communicate back and forth. Now I'm the only one with a live microphone. You are muted in the sense that you don't have access to that mic. Okay, we don't want to listen in your world. I'll handle the audio portion, but I do want to hear from you. So how I understand your questions and see, if you're understanding the concepts or not is by monitoring the question section. So what we're going to do is just do a simple sound check. You should be able to hear me clearly. You should be able to see a slide that says sound check, and you should also see the webcam. If all three of those boxes are checked, just give me a thumbs up. If you're on a mobile device, type in a yes in the question section, and then I'll see your response instantaneously on my end. So if you'd be so kind, let's just make sure that everything's connected properly, and then that way we can jump into the presentation. I think that's always the best approach so we can maximize all of our time today and get the sound check. So it looks like we've got, all right, I'm going to wait. Let's just make sure. I don't want to jump ahead until everybody has an opportunity to test your connection. So just say hello, say yes, type in that question section, and then I'll see your response instantaneously. So I got some OKs coming in. I've got KM. Appreciate it. Miguel, thank you as well. Okay, perfect. So it looks like everything is exactly what we want it to be doing, which is working. So that is a good step. All right, now, of course, it's out of our hands. It's GoToWebinar, but I've used them so often throughout my 13 plus years in the business that I have all the confidence in the world that we're going to be good to go. Okay, good. Awesome. All right, great. So as you can tell, it's private. So only you can see your chats and only I can see your chats. Somebody else in the room can see your comments, see your questions, and that's important because, once again, your privacy is important. All right. So no worries. Every question is a great question. The only bad questions are those potentially that go unasked. Okay, so we want to give everybody the opportunity. Okay, cool. So what I'm going to do here to start is we're going to be using several free resources. I know I've been around long enough. I know many of you may be thinking, this is going to be some type of hook where Matthew's going to show me something that is fantastic, that makes sense, but then the only way you can use it is if you buy something. Now, that's not how I like to roll in these presentations. So what I've found is that much of what is available out there in the industry is actually free to you. There's some tremendous resources that I have no affiliation with, that I'm not an affiliate with anything of the sort. I don't run sort of marketing for these groups. But what I found is that if you understand where to access some of these free resources, you can really cut the ties of reliance upon technology costs, charting costs, anything like that. I'm going to be calling out a lot of different free resources. You can follow along with me if you'd like. If you already are familiar with some of these platforms, such as TradingView, such as bar charts, then you're going to be a step ahead. But no worries if you're not familiar with those platforms. Anything I share with you today is applicable off any type of charting application. Much of what I'm going to share with you today are simple indicators that you can use anywhere, that are readily available on many different sites, from your broker account pages to such as TradingView, which I use a lot. We're also talking about things like Thinkorswim, which I trade at TD Ameritrade, so I have a Thinkorswim platform. If you have Fidelity charts, you have Charles Schwab charts, all of those are available. So I just posted in the chat box a URL that if you click, there's no download, there's no email required, nothing like that. You'll get this checklist. Okay, so this checklist, if you click that link I just dropped to everybody, I just want to get out some of the homework, some of the house cleaning items out of the way. I want you to follow along using this checklist. Okay, so this checklist is a simple process that you can download, you can print it if you like, but this guide is where we're going to begin today. This is our top-down approach. You can print this off, put it next to your trading station. As you're looking at the markets, you can just keep it as a PDF, save it to your phone. So however you'd like to do it, keep this link and it's yours, okay? That's going to be our guide, okay? So, to me, I want to have something to reference, and this is what I found here recently has been a huge help. So we're going to be referencing that guide throughout the presentation today. Now, before I get in there, let's just make sure, for those that haven't heard me speak before, I'll just give myself a brief introduction to you. My name is Matthew Mocorro. I've been in this industry since 2007. I am known as a master trader, technician in the marketplaces. I've trained thousands of traders all over the world, first-time traders, seasoned investors, everything in between. And what I've really found throughout my years in the industry is that simple and repeatable, to me, is the most important step. If we can repeat a process as simple as possible, then typically that's where we find success in the market. So that's my goal today, is to really walk you through a step-by-step process. All right, so let's get into some of the resources we're talking about. So the first one we're going to talk about is we're going to jump over into TradingView. So I have a free account. I don't pay for this access. Like I said, I'm not an affiliate, so there's no monetary benefit to me talking about them. To me, it's just simple to use. So it's just like any charting application. And I have, once again, a free account. Okay, so you see how it says upgrade. So they want me to buy a subscription, which I will not. I don't need it. But if you want any bells and whistles, you can, upgrade accordingly. So what we're going to start with is we're going to start by first answering the biggest question in the market, which is understanding how and why the markets move. Okay, so I'm just going to go to the NASDAQ. This is the Qs, QQQ, as they're referred to as, right? That's a symbol. Now it's an index. If you're not familiar with what these are, this is used as a way to understand what's happening in the market at a high level. So this is a basket, effectively, exchange traded fund. And what it's made up of is the top 100 stocks in the NASDAQ, which are typically your large computer and technology companies. You do have some large medical companies here as well, and you have other few smattering type of biomedical type of stocks. Anything related like that, you will find commonly in the NASDAQ itself, okay, the Qs. So, but what we're looking at first is I'm going to clear out some of this analysis for a moment. I'm going to clear up the charts, and we've got to be able to simply understand what's happening in the market. So we're talking about really two key steps here. Number one is we've got to get familiar with how the markets move. So right now I've got the Qs up on the chart, and you should be able to see that now. There's really three questions we have to answer every time we trade. It's what are we going to trade? When do we trade it? And then how do we manage that trade? If we can accomplish those 3 steps, then that puts us in a strong position to understand what's happening in the market. Now I'm going to get rid of my webcam for a moment, just so we can have some more real estate here on the screen. So to understand, this is simple. We've got the symbol on the top left corner of the screen. If you're unfamiliar with this, I'm just going to give you a quick walkthrough so you know what you're looking at. Now, next to the symbol, I've got the time frame. Now I'm going to start high level. I'm just talking about weekly. Okay, so we're talking about weekly charts here for a moment. I will drill down into dailies. If need be, we'll get into smaller time frames, but because the market's closed, we don't need to spend a lot of time below that time frame. Okay, but I just wanted to let you know what we're looking at. And then the other key thing to understand is this is the pricing information. Now I use Japanese candlesticks so we can get open, high, low, and close values on the charts themselves, on each bar. I like to see that information. Much of what you'll see is always typically defaulted into these types of bars. There's many types of bars, but this is not the class for that. We're just talking about traditional Japanese candlesticks. Now, just like any typical chart, you're going to see green bars are bullish. Okay, that just simply means the market closed above where it opened for that time period. Okay, so we're going to talk about time periods, which are the bars, the time frame of the charts. We're going to talk about trading volume as a leading indicator. And then we're going to use simple moving averages to understand trends, okay, direction of a particular symbol. But starting on a blank slate, we're going to start to dive into trend. Okay, the first step is to understand direction. Now, the Nasdaq's been the strongest index of the big 4, as I described them as the Nasdaq. You've got the diamonds, which is the Dow Industrial 30. You have the Russell 2K, which is the symbol IWM. And then, of course, you have the SPY, which is the S&P 500. This has been the strongest of those 4, with the SPY being second as far as relative strength. This is where you get a lot of headlines around the Nasdaq and the SPY, okay? But we're not going to get too far down that line. Let's talk about direction. So the typical way people go about trading is you start to go into the world of learning how to read charts, right? So let's go back in time. If you're a first-time trader, then you're living in the world I'm describing. If you've been in the markets for anything more than a few months, then I'm going to take you back in time to when you first began trading. I remember the first time I started to trade. This was back in 2007. At the time, I was an entry-level client support representative for one of the largest companies at the time in the financial education and trading technology space. And just like many of you, I wanted to learn how to trade. I was introduced to this company by a dear friend of mine. And I said, you know, I was in the mortgage business at the time. I said, okay, let me see what all the talk is about. Okay, so as soon as I saw the markets and I started to understand how money was made, I was instantly excited about the opportunity to learn to become a trader. You know, back then when you think about being a trader, it's all about, you know, the movies like Wall Street and other such like movies. And there's always a lot of excitement around being a trader, right? You know, you've got all these computer screens, you're able to make money on wherever you are, no matter what is going on in the world around you. You know, you can pull income from the financial markets. And so I went about learning how to trade, and I had the luxury of actually being paid to learn how to trade. Most people pay to learn how to trade, right? You pay to play effectively, but I was the opposite side of that equation. So the first thing we were taught was how to read Japanese candlesticks, okay, price. And then after that, the next step was how to draw trend lines. Now, what I found throughout my career learning how to be a trader, learning how to then ultimately become a master technician, is it's very subjective. You know, drawing trend lines is art. You know, I've got two small children. I got a 7- and 8-year-old, and I love to draw with my daughter. She's the oldest at 8. But it's art. You know, I have drawings in my home office. I'm not there now, right? I'm in the Pacific Northwest today, normally down in Florida. So I don't have my children's artwork next to my station as I normally do. But when you look at art, it's all based on the eyes of the beholder, right? I mean, I could look at a piece of art and think it's beautiful. You may look at it and think it's ugly. I mean, it's full spectrum subjectiveness to our viewpoint on art. And that's what makes it subjective. What we want to do is frame our mindset and frame our approach around the math of trading that exists, which makes it objective, right? 2 + 2 is 4. No matter what side of the bed you woke up on, if you're happy, if you're sad, if you're glad or if you're mad, if you're appreciative or not, if you're grateful or not, 2 + 2 is always 4. And that's where we want to try to put ourselves in. Now, we can't remove all emotions when trading, but we have to do our best to try to accomplish that goal. I don't want to remove the fun out of trading. I want to remove apprehension. I want to remove the level of anxiety that may exist in the trading world. And so what I found is to make it as simple as possible. So rather than come in here and try to teach everyone the art, and there's an art, and science behind drawing trend lines, what I like to do is incorporate very simple moving averages together. Okay, now moving averages are lagging. But since most of us are not in the markets trying to capture small percentages of profit, meaning we're not trading millions and hundreds of millions and billions of dollars like hedge fund traders do and institutional traders trying to capture small price movements, meaning fractions of a percent. We're trying to capture 5, 10, 15% in profits on a trade. So we don't have to be as precise. I know you may think I'm crazy, but we don't have to be as precise to the tick and then getting out at the precise tick. So rather than try to hunt and peck and try to search our way through and beat ourselves up and spend all this time and energy learning how to be a master technician of charts, let's incorporate some simple math-based trend indicators. And one of the most simple to use is a moving average. Okay, so I'm just going to use a very simple moving average. We're going to use 3 in total, but I'm going to start by describing one of them. Okay, then we'll start to add on and build a simple template so we can identify the market with a clear lens. Okay, so the whole goal of this is everybody in this room right now to see uptrends and see downtrends extremely clearly. Okay, I mean, without a shadow of a doubt, I want all of us together to be able to look at a chart and know exactly what's happening. Is it going up or is the price going down? Okay, that's going to be the key here. So this is a simple moving average. This is not an exponential. This is nothing more than a simple moving average, and that's what it's called. In this top left corner, I added the moving average indicator, but we're going to change some of the settings here. So once you have that first indicator up, now I'm demoing this on TradingView, like I've said. If you just logged in, this is a free account. This is not paid. I'm not an affiliate of TradingView. This is something that I've just used for years and years and years, and I've grown accustomed to it. This also applies on something like Thinkorswim, Charles Schwab charts, Fidelity charts, bar charts, whatever free charts you have access to. All of these moving averages are there. That's why I like to use them, because it doesn't matter where you are or who you are or what type of application you have access to, you can follow along with a strategy. I got some great questions coming in. I'll answer those. I see them. So let's just get this update. Okay, so right now it's set at 9. Okay, so the way this average works is that we're basing this line. Now, I'm going to turn it on. You see this blue line here? I'm going to make it bigger. Okay, but this is going to be one of our 3 trend lines. So let's make this a little thicker so you can see it. Now, if you don't want to follow along exactly as I'm doing this, you want to do it later, that's fine too. There is a camera button. Okay, I want to highlight this. On the GoToWebinar viewing window, there is a camera button. It looks just like one of those old school cameras. If you click that, anything you see on my screen will save a picture. So you click it, a picture will be saved to your desktop. So I think it's a wonderful way to follow along without having to worry about taking notes throughout the journey with us. Okay, so feel free to do that. So I'm going to change this average. Okay, so right now you can see this blue trend line, and the way it works, it's a math formula. So right now it's set on 9, but I want this set at 10. Okay, so I'm going to come into inputs. I'm going to change this to 10 in the length. So that is telling this indicator to only display a 10 length of bars. So right now I'm on weekly, so this is 10 weeks. We're going to go down to daily in a second, but this is a weekly chart. So every one of those bars you see on the screen is giving us the open, high, low, and close price on the week. Okay, so it's an entire week of trading. I've got a question. What does CBOE mean? That's the exchange where the Qs is located. Okay, so that's the exchange. And then I've got a question on what do the D in circles mean? So down here, these are dividends. So if you click on it, it'll tell you the dividends. You could turn that off, but that's just an automatic default, but that's there. If earnings were coming up, you would see an E. When I go to a daily chart, you'll see E. You won't really see that on the Qs, but you will see this on other stock symbols. All right, but that's what those mean. This D's on the bottom. So now that we know these are weekly charts, right? What this is giving us is a 10-week average price. So it's a rolling average. At the end of every week, this calculates back 10 bars and gives us an average in the form of a line chart. Okay, so this acts as one level of a trend. We're going to layer multiple layers here, but this is the first layer. So it's very simple. When I see as today, this is Tuesday, right? We're Tuesday, July 13th. Today's market has closed for the day, right? So it's about 25 minutes past the close. And this is where this will continue to build. Okay, so this is this week that started yesterday. This is this week's active bar. At the end of this week will be closed, and then we'll move on to the next week, next Monday. So if I could see here, here's the price, here's the today. I have my cursor on it. We are sitting at a close price at the end of the day today at $362.42. Okay, in blue, next to the moving average. Okay, that is the rolling average, the current average, 10-day average of price for the Qs. NASDAQ is $343.83. So $343.83 is the 10-day average, 10-week, 10-bar average of the NASDAQ, the Qs. Okay, so we are above that average. So just simply looking at where the bars are in relation to this blue line tells us that we are on a 10-day uptrend. Okay, so we are on the uptrend above that 10-week average. So let me change this to a daily chart now. So I'm going to go from weekly to a daily. Now every bar is giving us the daily price information for the NASDAQ, the QQQs, the NASDAQ 100. Okay, so here's today's bar. We opened at 362.03. We closed at 362.42. We closed above the open. That means it's bullish. Okay. Monday, the day before, we were slightly bearish. Okay. It's red. Friday, last week, bullish. Okay. You can see how this 10-day rolling average has been below the bars going all the way back to June 4th. Sorry, my computer monitor is blocking my big screen. Okay, so June 4th. So you can see just from June 4th, as soon as we got above that 10-day average now, right? Because now I'm on 10. This is now daily, so that's a 10-day average. We've been bullish. Now we only had a real bear move, right? One day below that blue line, which was on June 3rd. But really starting on May 20th, we went over that average. Okay, so it's a simple way to understand are we bullish or bearish. Now the 10-day period is more recent than a 20-day, right? Is more recent than a 40-day average. Okay, it's more closely aligned to the current market. So you can see how that trend line exists. Now, if I'm manually drawing my trend lines, which I know how to do, then it would look something like this. So this is where my manually drawn trend line would be, okay? So though it's not as precise as a hand-drawn trend line, it gets us a lot faster to the direction. So are we bullish or bearish? Is the cues, the symbol, are we bullish or are we bearish? A trend is not made in one day. I'm not talking about what happened today. Looking at the recent trend, which started May 20th, type in the question section. Are we an uptrend or are we in a downtrend? Are we bullish? Are we bearish? Bulls go up, bears go down, okay? Think about a bull charging, right? Bull comes up and tries to gouge you with their big horns. That's up, bears claw, down, bears down. Okay, that's how bears and bulls came into existence, all right? Yeah, right. So everybody's typing in bullish, everybody's typing uptrend. It becomes very universal. Let's flip directions. I'm going to go to the SPY. Okay, now I'm going to go from chart to chart. Is the SPY up or down? Right, SPY's up. It's above the blue line. Let's go to diamonds. Diamonds are up. Okay, uptrend. Russell 2K, IWM. Is this? Let me clear some of my additional analysis here for you. Are and is. What's the Russell 2K? This is IWM. Is it uptrend? Is it downtrend? Downtrend, right? Now we're below the blue line. Let's go to a big list. I've got a big list of stocks that I monitor. You can see how quickly we can run through Spice. It's space, okay? Space, downtrend. GNENI, downtrend. You see how all we have to do is just flash. Downtrend. NRZ, downtrend. Look at all these downtrends. NOY, MOGO, downtrend. Look at all this. See how quick we're able to jump in and see what's happening. We all will see the market in the same lens. Remember, that was one of my goals. Let's go to some uptrends. There's only a handful today. Here's some MasterCard. We probably all have one of these in our wallets, right? MasterCard, uptrend, okay? So now we can go from chart to chart, moment to moment, and understand what's happening. This is just one of the multiple layers I'm going to roll on here. Everybody follow so far, right? So the first step is direction, always direction. So we got to know what we're looking at. Very simple, and that's the key. And once again, I know that this is not as precise as learning to manually draw trend lines. It's not as precise. But I'm also understand what it's like to be you in your shoes, where we don't have hours and hours and hours and hours to learn and devote time, energy, effort, and money to become a master chartist. And I also know that we're not in there. The majority of people that I work with are not institutional traders managing hundreds of millions of dollars, billions of dollars, trying to go after 0.01%. They can make a fine living doing that. You and I can't really make the impact of our lives making less than 1% on our trades. It's just not realistic for us, okay? So we don't have to be down to the tick to be profitable and to be consistent in this market. So that's one layer, okay? Let's start rolling into multiple layers here. So what we're gonna do now is I'm gonna go back to those big indexes because most people have heard of them and it makes it easy to teach upon. Okay, so let's go back to the NASDAQ and now let's add on another layer. Okay, so we're gonna go another dimension. Think of these as confirmations. Okay, the more confirmations that we have, the higher probability of success we're gonna find. So this is one layer. Let's go to two. The second layer is adding in an additional moving average, and we're gonna use a mathematical process to add the length to it. So I'm gonna take this next one, and I'm gonna make this 20. So we're gonna use a 20 moving average. I'm gonna change the color so that a little bit more distinct behind what we're looking at. So now we've got two lines, and I'm gonna get rid of the actual bars, okay? I'm gonna get rid of those bars. So let's now talk about stacking two trend lines together. Now, many of you that have spent the time, invested the money in educational classes and whatnot to learn how to be a chartist, you know to analyze, you're looking at multiple time frames, okay? You're looking at weekly charts, you're looking at daily charts, maybe you're looking at 4-hour charts, maybe you'll go down to a 1-hour chart, and you're looking at multiple time frames to get an assessment of direction with one reason. You want as many confirmations that you're right as possible. Think about it as insurance, okay? We're gonna have as many signals or signs that we're right. The more we get on our side, the potential higher probability of success that we're after. So now I've got these two trend lines. One's a 10 bar. The next one is a 20. Okay, so I'm on a daily chart. So the blue line is a 10-day moving average of price. The yellow is now a 20. So now we're looking at a larger, double the length of this next one. And just think of directions, okay? So this is today. You see the blue line is above the yellow line. What is the angle of both those lines? They're both up. So that tells us that the Qs on a 10-day and a 20-day are in an uptrend. So, but the markets don't always stay there. If I go back to the 4th of May, you see where the blue line crossed below the yellow line. That is a shift in direction. So we were moving up starting back in March, the end of March. You see the date on the screen. Went up to an uptrend, extended up, and then we lost momentum, shifted directions, hit a low, and then we crossed back up. So now these crosses start to give us a sign of the impending change, okay? So now we're looking at relationships between crosses. You have a relationship of the width of the separation, okay? So this is a little bit advanced, but the wider the spread between the blue and the yellow, the stronger the trend, okay? So as it widens and separates, that is a strong trend. It starts to really push away from the 20-day. And then, for example, right back here, see this pocket? Think of this as a pocket. Okay, see how wide this pocket is from the blue to the yellow? And then it starts to get really close. See how close it gets? That means the prices are getting close together. Those averages are getting close, which means there's something that's potentially about to happen. Then when it crosses below, you start to see how it spreads again. You see how then this pocket gets wider and wider, and then it hits a point of reference where it then starts to reverse back close together. So this ebb and flow happens over and over and over again. So now I want you to start to visualize and think about not only the relationship of blue to the yellow, but where these crosses occur. That starts to really build a directional trend analysis. Now, this is all done without even looking at the price. So now when I put the candles back on, you'll see how the price action correlates to those arrows, right? The arrows and the crosses. So here we go. What went first? The bars always will give you the closest indication of what's happening, meaning when the bars cross above or below those averages, that's the first sign. So when I look here, let's go to this cross. I'm going to go back in time. TradingView allows you to go back and freeze frame it and then work your way forward. So take a look at this. So on the 20th of May, you can see where my cursor is. The market pushed bullish above the 10-day average. Now, if I get rid of these moving averages for a moment here and just go to the charts themselves, if you are a classically trained chartist, then you would have had your trend line just like this. This is a classic trend line. This was a downtrend at the time. Here's this high, lower high, connected those dots. This is that trend line. That's why I say you will be more precise with a hand-drawn trend line 9 out of 10 times more than a moving average, because a moving average is lagging in nature. I mean, that's the essence of an average, is that it's lagging. We need 10 bars back in time to get us our current number, right? That in essence is a lag. So if you see this as a trader, a technical trader, chartist, then you think reversal. Okay, that means reversal. As I layer on the 10, you see how it lined up? It lined up with that trend line. The market was below those blue lines, then it closed above it. Boom, reversal. Now, the confirmation that we want is we want as many as possible. So you see how we're not quite above the yellow. If you want to be more conservative on your entries, then you want to wait for the full cross of the bars. Okay, so it's another level of conservativeness. I think I just made that word up. It's another layer there to just be a little bit more conservative and wait for additional confirmation. So a few bars go by. There's a cross. So that is for the conservative ones in the room. You see how we just waited another day or two to get a confirmation that we're going to go above the 20-day. Okay, so I like to do it in layers so you can visually start to see how these lines interact together independently. Once we layer in candles, it always seems to add a level of complexity, and I want to try to simplify it. Okay, so bar by bar, as we start to roll forward, the correlation between how those lines react become important for us. Now here we are back to the current market right here. That's today. Look how the bars react against these trend lines. Okay, so as we go back, I'm going to go back one more time just to show this. Watch now how the blue and the yellow lines, let me get rid of my hand-drawn line. Watch how these bars react as we march forward. You see how we bounce off this yellow line here? We opened right here off of this 20-day moving average. Right here is the open price. Bounced up off of it. Then we had an extension. Then you see the market start to come back down to those trend lines. So you can see here, see how we're coming up against this trend line on the 2nd of June? See how we broke below it? Where did we bounce? We bounced off of the 20 moving average. Okay, I got a good comment coming in here. I got a request to change the color here. Let's go to like a, how about a fuchsia? How's that color? Is that fuchsia? I don't even know what that is. Is that color better? I'm just going to assume it is until I get a confirmation. So now instead of yellow, we're looking at this fuchsia. Okay. See how that bar bounces, that wick bounces off that? That becomes, somebody goes, thanks, whoever asked. All right, so, and look how it bounces again. It starts to act as support in an uptrend, okay? It's a two-level, we have two trend lines stacked on top of each other, okay? And watch how it becomes this consistent support level riding underneath. Support is like the floor. I'm at my sister's home. This is her office, and broadcasting off my laptop, which I normally don't do. I've got a huge, PC, 4 monitors, but I'm making good here. I want to make sure I was here for everybody. But I'm on a 2nd floor, and the floor is holding me up. There's a balcony outside the window. That balcony is support, right? So we don't fall through to the bottom floor, okay? And then ceiling on top is the resistance, holding me back from jumping with excitement out of the room, right? Okay, but that's what trend lines are. Most people think of support and resistance as flat lines on the chart, but actually trend lines are just angled or diagonal levels of support and resistance. And so same things happen with these moving averages. Look how the market once again tested, penetrated, and it said, nope, we're not going to stay below that average. So then the bulls push it back up. It becomes a very simple flat. And look at that bounce. Another bounce off of that trend line. Another test. Another bounce, extension. So whenever you now pull up a chart, I don't care what the chart is. It could be stocks. It could be an ETF like this one. It could be a Forex currency pair. It could be a cryptocurrency. When you see the markets and where those bars are in relation to these trend lines, it's going to help you understand what's happening, what has happened, and then it gives you insight to what potentially can happen next. So if you see this, let's go back to, let's see what day this is. This is on July 8th. Okay, so this is literally last week. So last week, if you pulled up this chart and you saw this bounce, what do you think is going to happen? You think this should go up or should go down as it's bouncing off this trend line? What should happen? Should it go up? Should it go down? What are the probabilities? Yeah, great question. I'll show the SPY too. Yep. It should go up, right? So it's probability. See how the bounce? So how many bounces did we have? Well, we had on this run going back to the 24th of May, okay? 25th of May. So we're now July 13th. Bounce, okay? That's a bounce. Bounce. 1, 2, 3, 4, 5 times. Okay, so 5 tests. I like these tests to come back to Earth and see how the markets react. And then if they go beyond that, I'll show you how to manage that process. And here we are now. So when you pull up the Q, you know now it's an uptrend, right? Let's go to SPY. I have a question on the SPY. SPY and the Qs are very close as far as strength. Okay, so here's the SPY. Here's the initial break of the SPY, which was on the 22nd of June. Bounced off it again. Okay, tested, failed to test, and break this level, close up here. So the most important price, I get this question a lot. You know, there's 4 prices: the open, the high, the low, and the close. When I look at a candlestick, the open, and it's always dependent upon the color, right? So green is up, red is down. Green are bullish, red are bearish. If it's red, that means the market closed below the open. When it's green, the market closed above the open. So the close price is the most important price. So if I go to a line chart, I'm going to change this from a candle chart to a line chart. The line chart represents the close. Okay, so I've got another line here. Don't worry, I'm just going to give you a quick walkthrough. The close price is the most important. Where the close is in relation to those moving averages is the most important. Not the wick low, not the wick high, not even the open. The close is the most important. So you can see going all the way back until the 22nd of June, the close every day has been above this blue line. That is what's most relevant. When I turn back the candles, a lot of people get confused when they see these bodies, right? They're like, well, is it below? Is it above it? Always refer to the close price. Always look at the close price. This is the close. The close held above that 10-day average. Okay, that's how you're able to see what's really happening. Okay, it doesn't matter where it opened for the day. Doesn't matter the high price. Doesn't matter the low price. At the end of the day, like today, that price is the most relevant. Okay, and as long as that close is staying above these averages, that is the bullishness of it. Bullishness. Okay, but we're going to add one more layer. Okay, one more layer to give us another glimpse into the market price action. Because that's all we're doing. We're looking at price action in relation to previous price. That's all analysis and trend identification is. So we're going to add one more moving average here, and this becomes our, I don't want an EMA. I want a simple moving average. This doesn't have to be complex. We're going to keep it super, super simple. Okay, so now we're going to add a third moving average, and then we're going to make this a 40. Okay, if you've heard of Fibonacci's, then there is a sequential numeric value. What color do I want? That dark orange, I think, can shine well on your screens. So now we're going to add a third dimension to the trends. So now I've got 3 lines. Okay, I've got a dark. Now we're on the SPY. This is not the NASDAQ, so I change this to the SPY. And here's the thing: it's applicable on any symbol, so it doesn't matter what I teach you upon. It's all going to be the same relative focus. So I already walked you through the blue and the red, or the fuchsia, the 10 and the 20. The 40 is just another level, another layer. Think about the 40 as your last line in the sand. It's a line. Think of it as the last line. Because it's a larger scale, okay, instead of 10 days, instead of 20, we're looking at 40 days. Okay, so we're looking at, and there's a mathematical process. Think of 50. Think of the half. Think of the mean. Think of the middle. 10 is half of 20. 20 is half of 40. 10 is 4 halves of 40. That's for advanced lessons, okay? But that's why that's a 10, 20, 40. That's why I don't have a 3, a 7, a 9, right? I'm looking at a math function of 50 half. So when I look at these lines, as long as we stay above this 40, that's an uptrend. Now you'll see a lot more up and down movement on a 10. You'll see a lot more trend change on a 10 average than you will more than a 20. And then of course you will on a 40. You see how smooth this 40 days. You see how there's very little movement. You know, when I say movement, I'm talking about swings. You see how this goes up, it comes down, it goes up, it comes down across this, and it goes up. There's a lot more undulations here. If I compress this, you can see a lot of that, right? You see how there's a lot more squiggliness to the blue line than there is the orange line, right? The orange, these are simple moving averages. That's correct, TJ. Simple. The power of these simple is that I'm looking at them at 3 levels. So now we're combining the 10, the 20, and the 40 visually to understand trend. I took the price off. You don't see the bars. You don't see the high, low, close Japanese candlesticks here. I can now go back in time and you can tell me the types of trends we're in. So back here on December 11th, feels like an eternity ago. We're in an uptrend, right? I'm looking at the blue lines. If I go beyond that, let's go to the 18th of September, the beginning of the 4th quarter, 2020, pre-COVID. Believe that, pre-COVID, okay? Well, at least pre-COVID in the US. Who knows where it started or when it started? That's not the talk for today. When now I see the 10 cross below the 40, okay, imagine a 10-day average crossing below a 40, that's a trend change. Okay, that is not a correction, that's not a retracement, that's a trend change. Look at how all of these bounces come up and down the line here, right? Now this only, oh, it goes back farther. This must be the, yep, Corona sell-off. This is the Corona sell-off, February 27th, okay? It's a Monday. I was in class here. I was in class teaching. I was in classes live teaching when this happened. And it was awesome because, I say awesome, I mean, not the COVID, it was awesome, but the trading conditions. Because as soon as it flipped, we all started to short. We were buying puts, we were short in the market because we had an indication that we had a trend change. Most people, it took a few weeks to switch their hats, right? To go from bullish buyers to sellers, to be bullish buys to how can I capitalize on a short move, okay? Buying puts is what I do. I don't short stocks, I buy puts. But by just using a simple set here of averages, we saw that the 10 flipped below that 40, uh-oh, trend change. Take COVID out of the situation. These conditions happened in the past. Go back. See this bearish move? This was back on the 11th of 2018. The 4th quarter of 2018, if you remember, was brutal. It's a huge sell-off in the 4th quarter of 2018. We saw it on October 11th. October 11th. Some of my traders went to cash. Some of my traders went to switching hats to bears. All right, they became bearish traders, meaning buying puts, shorting stocks outright, things of that nature, because we saw the shift. That's how important that 40 is. It's extremely relevant to long-term trend. Long-term trend. So if I get rid of the middle, and let's look at the blue, the 10, with the 40. When that 10 crosses above that 40, that is a big shift. Okay, that's not a micro change. That's not a retracement. That's not a blip on the radar. That is a confirmed trend change. Reversal is a more relevant term. So there are extensions where the market's moving up or market's moving down. Those are extension moves. Okay, then you have retracements. Okay, where you get a pullback. That's a retracement. Then you have an extension, right? Then you have a reversal. A reversal means up to down. That's a distinct difference. An uptrend is an uptrend. Even though in an uptrend you may have retracements, right? It means the market price goes down. It's still an uptrend. It's just retracing. But when you get a reversal, that means you go up from down. That's a totally different level of trend. Totally different. Yeah, this is being recorded. Yep. And then as time moves, you're able to understand the flow of where we're at. I don't know what that little blue line is, but that's cool. That little teal line. As long as we're above that 40, uptrend. Uptrend, uptrend, uptrend. And then we cross below, downtrend, right? Uptrend, right? Uptrend, right? We had a little dip and then we came back. And you can see how the price action moves up and down the line, okay? The correlation between these lines, I don't even need to look at price. I don't need to look at the bars, okay? The bars can be confusing. So I turn the bars back on and you can see how the markets react. When I say the last line, now we look at where these bars are bouncing. See these bars bouncing down here? Now, institutional trader, I get this question a lot. Why not a 200-day moving average? Why not a 100-day moving average? Why not a 50? There's nothing wrong with those. 50 is half of 100, 100 is half of 200, right? 50 is 4 halves of 200. I'm a trader. Many of you are here today because you're traders. The people that use those large moving averages, I call those investor indicators. This is what a 50, 100, 200. Institutional traders use this type of setup. Who else? Talking heads on Fox Business, Bloomberg, all those other financial sites and financial organizations out there, they run something like this. So they'll say, oh, we're above the 200 moving average. We're bullish. 200 days, that's almost an entire year. You and I are not looking at years and years and years before we make a trade, right? We're not holding positions for decades, So even when you look at something this big, how long have we been bullish on the SPY on the 200? Well, we haven't been below the 200 moving average. Jeez Louise, since May 26, 2020. Okay, so we're talking 14, 15 months. Because what we're going to explain now is how to. Oh, great question. Did you put those right pointing arrows in or are they generated? Yeah, this is just a trading view. These are trading view arrows. Yeah, you go right here. You got a whole. This reminds me of my kids, and they have those little sticker books, and you can put your stickers on your books. Lots of icons. This is too big. I mean, this is a big look. Okay, we're not commentary. We're not trying to write commentary here. To me, this is so large that it's almost impossible to be wrong. But it's so large, there's no real tactical advantage to go this big, right? It's like saying, let's do a 500-day moving average. You know what? Everything's in an uptrend. If you did a 500-day moving average, every stock in the stock market would be in an uptrend. How can we use that? We can't use that, right? So let's get back to, this is what I call my trader setup. Okay, this is for trading. I'd like to say this because it's close enough to heart that we can do something with it, but yet broad enough so we have a good, I would say, 15,000 foot view. I got to fly home on Thursday back to Florida. We're probably going to cruise at 35,000 feet. That's high level, right? You look down and the towns look about this small, right? Like the size of a postage stamp, and it's Denver, okay? So we don't want to be too high up, we don't want to be too low where we're stuck getting in and out with all these constant trend changes, right? Because the tighter we go, the more directional shifts happen. So I found this to be a very applicable for people, I say people, traders that are looking to be in a position for, weeks at a time. Okay, I'm not talking about minutes, right? We're not talking about hours in a trade, and we're also not talking about months and months and months in a trade. We're talking about 3 weeks on average is my trades that I send out. About 3 weeks. Okay, that means I get in on average in 3 weeks. I'll be able to either take my profits off the table or I'm wrong and we get stopped out. Okay, so it's about a 3-week average trading window for this. If we're looking at something like this investor, which is our larger moving averages, our 50, 100, 200, I mean, we're talking months and months and months and months in a position. Okay. For people that have a smaller account, I'm saying less than, let's say less than $50,000, less than $75,000. We've got to have a little bit more activity, right? Meaning ins and outs, buys and sells, right? Round turns in a position to make money. I mean, if not, you're going to be holding a position to make 5% in 6 months, which is better than a bank account, but still, that's not why most of us are here today, right? We're here to make 20, 30, 40% a month, not a year or not even 2 years, okay? So this is months and months and months in a position. This is more weeks in a position, okay? A couple weeks. So doesn't matter if it's the SPY. Let's see, what are some of the top gainers today? It was overall bearish market today. How do we know it's an overall bearish market? Well, we saw the prices already. But if we go to some top gainers, I'm going to introduce another layer, okay? So is everybody comfortable with these blue lines? I'm going to change the yellow again. This is a template of mine that I use, so I'm going to change this. Let's do a purplish line. That's too dark. Let's go this line. I should do the fuchsia. And then I'll do the long-term orange. That seemed to be a hit for everybody on the color wheel. There we go. Okay. So I'm going to go back to this. So now we've got our blue, fuchsia, and orange. Okay. But what we're going to do is I want to jump over and I'm going to show you the next powerful tool. Trend is important. The next important step is how do we know where the action is? Okay. There we go. GS and Pepsi had some good moves today. Goldman Sachs. Nice. So let's take a look at, I'm going to go to this. This is a great little tool here. This is for teaching folks. What I'm going to share with you now is not, I don't want everyone sitting there going to this list I'm going to give you and just buying them. Okay. This is not what this is for. This is to teach you something. Okay. It's 2 o'clock, so we're in here. Just want to make sure we don't go too far. I could talk about this for hours. Okay, so I've got to monitor time. So what we're looking at here is a simple list. Let me zoom in a little bit more. There we go. So this is a simple place to go. Understand who the top gainers were today. This is Yahoo. Like I said, I'm doing this all free resources. You don't have to have a paid anything to do this. Now, many of you may think, well, you can't be doing this for free. I'm doing this webinar for free. Okay, getting this information, giving you tools and resources for free. They're all available to you. If you like what you see, the process that you're seeing, me and my team provide trade alerts, signals. We send them out to you every single day. So we walk through this process every day and find stocks poised to break out, and then we deliver them to you via email, text message alert. It's called our Cash Attractor Surge program, Cash Surge Attractor. And you can subscribe to it, and we'll send you trades every day. That's the service that we provide. Think of it as a VIP service. I'm teaching you this. You can go out on your own and use it. Or you can have us do it for you. Or you can do the best of both worlds. You can apply the strategies, get us and have us deliver trades while you learn it, right? So you earn while you learn with us. Okay, so it's another way to do it. But that's how I provide service, just for your reference. Let's get back to this. This is just a list of stocks today that were the top gainers, meaning they went up the most. I'm going to share with you a very powerful piece of data that can literally change your trading success trajectory, okay? From making a little bit to making a lot. Volume is one of the key decisive indicators of what's going to happen next. There's thousands upon thousands upon thousands of stocks to trade. There's billions and billions and billions of dollars traded every day. Not all of those billions and billions of dollars are traded equally across those thousands and thousands of stocks. They're not. Some days there's a focus of money being invested. What do you think happens when you have a focused energy? Think of a tidal wave of cash, of action, buying a stock. Do you think that price goes up a little bit, or do you think that price goes up a lot? Type it in the question section. If there's a surge of activity, that's why it's called the cash surge attractors. But if there's a surge of cash behind a stock buying pressure, which way does that price go? Does it go up? Does it go down? Does it go up a little bit? Does it go up a lot? Type in a little or type in a lot in the question section. Let's get a simple poll. When I see a big tidal wave of cash come in, yeah, it goes up, and it goes up a lot. Take a look at the screen here. Take a look at the screen. Now, today's a low day. Today's a very slow volume day in the markets. I'll show you how to see that, okay? So I already know that, but I could tell based upon the movement. I mean, there's not a lot of top gainers today. Most of the time, we'll see a lot more double-digit gainers in a single day, but here's today. So let's go here to this China stock. Now, I don't invest in Chinese stocks. That's just my thing, but it's still a stock, okay? Take a look here. This is the symbol. This is the name of the company. This is the price that it closed at, the final price. So if the market was open, this would be a live price, but market's closed. To the right of that is the change. So that's the dollar amount that stock went up. This percent change is the percentage of that movement. Okay, so China Yongda Automobiles Services went up 23% today. This is why. Average volume, which is this column, is the 3-month average of activity, the number of shares traded. This is not dollars. This is the number of shares traded. It's about 9,200 shares a day. That's super small. I don't trade super small volume stocks, but this is the number. Today is this volume column. Okay, that's the number of shares today that were traded. So typically, CYYHF trades at 9,200 shares a day on average. Well, today there's 46,000 shares. So mathematically, that's 5 times 9, 45. So 5 times the normal activity, stock surged 23%. Okay. You look up down this list, you're going to see some gainers. Like, let's go to Nokia. This is a meme stock, Nokia Corporation. But you see, this 38 million is the average day. Today was 112 million shares traded. That's a 9.5% stock price gain. Okay. If you look up and down this list, there's many of these had a surge of activity above their normal day. So it's one thing to know that there was a lot of shares, right? A lot of shares is relative, right? It's subjective. I may think of 10 million shares being a lot. You may think a million shares is a lot of shares traded, but it's got to be relative to something. We have to compare it to something. Well, the something is a typical day. So if a typical day for, let's say, Apple is 1 million shares, but today there was 100 million shares, 100 times, that stock price is going to jump, okay? And it typically doesn't just jump for that day. Typically, it creates momentum that carries for days. So if I can help you identify, help you find, search through thousands of stocks to know which ones had a surge and prove to you, and I'll show you on the charts, prove to you that high volume activity creates larger daily trading averages, daily trading ranges. That should equate to larger profit opportunity, okay? It also works on the top losers, okay? So let's go to the losing side, the ones that went down the most. So these are the top stocks that lost the most, okay? You have gainers, losers. Look at Newegg Commerce. Today's stock price fell 16%. It's a big dip. Now, if I bought a put on that, I'd be a happy camper, right? The average day is 2.8 million. Today's 3.2. Stock price fell 16.5% almost, right? Look at Shoals Technology Group. 1.4 average day. Today, 3.3. Stock price fell 14%. So it goes both sides. Surge up, price goes up. Surge down, price goes down. It works both sides. 1 million a day for Apollo versus an average of 379. That's almost a 3x activity. Stock price falls 13%. And you can look up and down the board here. AMC, another meme stock. You got space right here. You know what's amazing about space? The guy Branson goes to space and he gets to have a 7% stock price drop. That's not cool, but that's the market for you sometimes, right? You sell the news, you buy the rumors, right? And that is prime example of selling the news. But the key here is this volume. Now, nothing in trading is 100%. Nothing in life is 100%. Many of you probably saw and you said, well, some of these dropped big, but they didn't hit their average. Folks, there's no 100% anything. If 7 out of 10 times there is a major reaction when a surge takes place, is that worth knowing? Is that fair to apply? 70% is low. Most of the time it's 90% or more. When you see that surge, you see a bigger price move. But if it's 70%, let's say, is it worth your time to show up today? It is. Okay, let me show you the charts. Okay, so let's go to the charts here for a second. I'm layering this in. Let's go to the SPY again. I'm just going to stick here, then we'll go to other charts as I build this. We need to add one more layer, the final layer to the charts. So we've got trend. Okay, we've got trends are the 10, the 20, the 40 moving average. That's our trend lines. We then talked about the crosses of those trend lines. The next thing we're going to do is we're going to add in the trading activity indicator. We want to have an indicator to let us know, is this a topic of debate, meaning are there people buying and selling this stock or not? We want to be where the action is. We don't want to be on the turtle side, right, where there's nothing happening. So I'm going to add a volume indicator. Okay, so this is a simple volume indicator. So you go to indicators, you type in volume, and it is this one. It's not the volume oscillator, it's not a net volume, it's volume. You turn that on and add it to your chart. Now you can set the parameters. So I use let me get a different color here, get this to pop. There we go. So we are using a 20 MA length. Okay, so we're using the middle moving average length of 20 on the trend line. We're also using it on the volume to get us an average 20-day volume. So now I've got this column indicator below. This is giving us the daily volume. How high the bar is means the more volume. Now we're looking at the relationship between the volume of the day versus the average. So here in this indicator, see how the numbers are changing as I move my cursor? See how those are moving? Okay. This is the same moving average that you see up here. This is price moving average on the top. This is volume average. Okay, so this is taking the average of volume traded over 20 trading days and giving us an average. So now instead of looking at price, I'm looking at volume against an average volume traded. Okay, so it's another dimension. So look at today. Look at the data box under the volume 20. Today there was 52.69 million shares traded on the SPY, but the 20-day average is 65 million. So that's a below volume day. Remember I said it's a low volume day today? That's how I knew it, because we're below the average. Monday, below average day. Friday, above average day. See how the column top is above the average. So now visually, I don't have to go look at these numbers, okay? I can visually recognize the moments and the days, because I'm on a daily chart, where we were above the moving average. Make sense? So let me highlight it just to double confirm, right? So above average, above average, above average day, above average day, okay? Very simple. Now I can visually look up and down the line here. So watch this. So now I can visually see what's happening. Okay, so let me get rid of this drawing down there. I think we're all smart enough to know when we're above the line and where we're not. Okay, so here's today. So today, the SPY closed is still in an uptrend. Even though we had a bearish day, we're above all three lines. So the SPY is an uptrend and we had low activity, right? Low volume. Now as I flash through, there's the Q. Q had at volume day, right? So that's a volume day. Diamond, low volume day. Russell, lower volume day. Now let's go to Cotty, right? Low volume day. DHT, big volume day. Okay. So what does this mean? Let's put it together. Let's go back to this SPY for a second. So it's a simple example. I want you to go to, and I'm going to zoom in here for a second, and let's just make this as simple as possible. Is this bar here, let me draw on this, is this bar bigger than this one? When I say bigger, I'm talking about from a high to a low, okay? Is this bar bigger than today? Is this bar bigger than the day before, which was Monday? Is it bigger than this bar, right? Bigger than this bar? Bigger than all these bars, isn't it? Bigger than all these bars. Well, these are all low volume days. See these? Some of them are at volume, right? Look how small those bars are. Look how small this high-low swing is. Then I get a big bar, right? If I go back consistently and look at the big bars, the high-low swings, you're going to see below that, bars above that volume. You're going to see columns above that average. And it can be on any chart of your choice, any chart, any market of your choice. And when you start to see that, you're going to see that there is a common reaction to high volume. The common reaction is bigger price move. You will see consistently a higher average range on that day when there is a surge of volume, period. That is one of the most indisputable facts about trading. Now, of course, there's going to be exceptions to every rule, but for the large majority of big action, big high-low swings, you will see higher than normal activity. So how do we put it together? Okay, remember that checklist we talked about earlier today? Here's the link again. I'm just going to give you the full link. Here's the link. You could type it into, copy it, save it. But I'm talking about this checklist. This checklist here is going to put this together for us. This old checklist right here. We'll put all of this together. So I've walked you through crosses. I've walked you through trends. I've now taught you through the volume side of this. Okay. That's a good one. I got a great question. Can you also plot a second volume average 10-day to anticipated possible volume surge? Sure, you can. It's another layer. But you're gonna have to get a paid account at TradingView because you can only have 4 indicators on the free version. That's why it's 4D. I want to make this free and available for everybody. Okay. You can get as complex as you want, but to me, there comes a time where you have too much on your chart. When you have too much going on, that you can get contradictory signals, and then we're all just scratching our head wondering, what do we do, right? You can spin yourself in a circle. So I'm going to get rid of the price again, and let's just walk through this. Okay, I'm going to get rid of the price, the bars, the candles, and I want to just walk through how we put it together. So let's make this applicable. Okay, let's actually use this thing. So I want you to look at when these trends take place, right? When the real reversal happens. So I'm looking for the initial cross of that blue. Now we're on a daily, and this is the SPY. It's been super bullish. Super bullish for really since the end of COVID. Let's just say this is the November 9th. Okay, so let's go through this initial dip here. I'm going to show you this. See this massive run? Okay, so look at this uptrend. So when we had this blue dip below the orange here, right? So we had the 10-day go below the 40 just for a few, looks like a week. Then it came back on, right? And then look how long the trend stayed above. We had a bounce off the trend line here. Remember I talked about bounces. But overall, look at this. Thing's been a rocket ship, hasn't it? Look at that move. Okay, we're talking, if I compress this from that initial break, now I'm going to go to any chart you want. We go to Target, we can go to Teslas, we can go to MasterCards, we can go to anything you want to see. You'll see this consistently. This is where it started in November. Okay, the price was $338. We're now at $435. Okay, so we're talking $100, about 30%. Okay, since the end of November or beginning of November last year, 30%. If you just bought it and sat on it. There's something here to understand so we can actually trade it. Watch this. I'm going to go back in time here. Let's go back to this initial cross. You see this cross happen here, right? I took the price off. You see this blue line hook and break above that 40. They're virtually identical. Look below. How much volume made that trend change? There's 172 million shares traded on that day, November 9, 2020. 172 million shares. The typical day, the average has been 85 million. So we're talking over 2 times, and this is one of the most actively traded symbols in the market. The SPY is one of the top 3 most liquid symbols, instruments to trade. In the overall, the entire market, the SPY is one of the most traded, heavily traded symbols. A lot of hedge funds, of course, you imagine, a lot of mutual funds have the SPY in their listing, right? I mean, this is a big, big player. So when you see a 2x surge, something's happening. See how that bar shot up above that average on the bottom? So we stack these together. So what we look for is a cross at the 10 above that 40. We're looking for the cross with a surge. If we get a cross with a surge, that's something to trade. That's what we want to trade. That's what I want to trade. Because the outcome is we get into a momentum reversal position. Don't you want to be back there in November? That's how this is how you stack all of this vertically together into a trading strategy. Now I got to scroll up here to catch this because it went up like a rocket. And here we are today. So let's go to some commonly traded stocks. Let's go to Apple. I got a Colgate. We'll look at those. Goldman Sachs was a mover today. Big action. Okay. Doesn't matter. Target. We can go Tesla. That's not how you spell Tesla. Tesla. We can do Chase. Oxy. We can do some small ones. Pepsi. Okay. Watch what happens here. you'll start to see when the breakouts happen. Let's go to Pepsi. And where are you at, Pepsi? Down here. Let's get these charts on. Watch how this jumps out at you. Now, you see a move today on Pepsi, right? So Pepsi today went up to 2.3%. When did that breakout happen? Back on the 25th of June. When did that cross happen? See where it crossed? Here's the action. This is what started today. Today's today. Today's in effect, the cause began back here. Okay, see these crosses? Volume decision bar, boom. Okay, see how this volume created momentum that shot up today. Then today was a big volume day. 8.7 million shares today. Average day is 4.9 million. But today's an outcome. What created this began when the price shifted, when we had a reversal. In fact, you go before that, let's go to another big move on Pepsi. What was the other latest big move? Look at this bar break above. You see this bar close? So now we're going to incorporate the close in relation. Where did the reversal happen? Well, it started March 22nd. Was this a volume decision day? Of course it was. The day before was also a huge volume day. See, the volume day broke above the 10, boom, bounced right off of the 40, bounced right off of it, slingshot effect to the next day, okay? And we know what happened with Pepsi, big rally up. We're not talking a few percentage points on these trends, okay? Trend is not made in one day, right? It's not made in one day. Look at this massive move. And then we finally reversed below the 40. Still hasn't gotten there. Still holding above the 40. Boom, there's the trend change. Okay, so there's the trend change. But you talk about price movement, right? Here's the initial breakout. You're talking all the way here, just 5.25%, as much as 8%. If I'm trading an option, I'm back here down at these previous levels out. Okay, but that momentum is what we need to find. You can do the same thing on Tesla, right? We had a nice reversal on Tesla back here, break up out of the 40 average downtrend on the 23rd of June. Okay, another test. See how this test held? Still an uptrend. Okay, and it makes it applicable and easy to understand. Now, how do we find it? Okay, let's do the final step and then we'll wrap up today's presentation. Here's target. Look how beautiful this chart looks. Doesn't it look simple now with these indicators? I think it looks simple. See, here's a cross on target back here. Must have used this in class. Another great example. It just happens over and over again. Once you have a mechanism to see this happen, look. This is what we want to find. The point of the reversal. When you see a decision bar, decision, was that a decisive day? 7.7 million shares against an average of 5 million for target. Look how big that column is above the average. Look at the close. You see how we shot up and closed above the 10, 20, 40. That is a reversal. And you get the slingshot effect. And look how we ride above. Oh, test fail, boom, bounce off support. And here we are today. Beautiful chart. So where do you want to be buying? What point do you want to buy? You guessed it, at the point of reversal. That's the point of reversal. There's other techniques. There's other ways to get into an existing trend. 3 stages of a trend. You have pre-breakout. Pre-breakout is where my arrow is. This stage is your breakout. This is the active trend. When we get out of this trend is when we flip over the final line, which is this 40. That is your last line in the sand down here. That's the final piece. La resistance right here is this 40. You can see how that momentum started at this break. That's where we want to be. So the question should be, how do we get to that point? Because if I'm just trading target, how many trades have I had this year? 2. If I'm a buy side trader, most people are only on the buy side, meaning you're buying the stock or you're buying an option, you're buying a call. Most traders, retail like you and I, are on the bullish side rather than the bearish side. So if you look at the buys this year, you really only have 2 trades on target. 2 trades, right? Here's the beginning of the year. How many bullish trends have we been in? Well, there's trend. We're in one trend right now. This is an active trend. That's one. Here's the beginning of the year back here. Yeah, you have your new entry was back on November. So this year it's 1. So if I'm an all or nothing trader, meaning I only trade a handful of stocks, then most of the times I'm getting beat up because I'm getting into retracements. I'm getting in when the market's ending the trend, not beginning the trend. So we have to expand our search capability. How do we do that? Well, I'm going to jump you over to a simple stock screener. Simple, simple, simple. Take a screenshot of this. Take this home with you. Use it. You want me to do it for you? We got a product. It's $3.99 a year. I'll send you trades every day. It's super cheap. Super inexpensive because we deal with the masses. So we've got hundreds of people pay us $3.99 a year for an entire year, and we send them trades every day. So it's not a monetary issue by any means. Or you can do it yourself, or you can do this, learn this, because we have classes every week, live sessions every week. Accession has been this week, so I've been out of town. But next week, we got classes Monday at 7 o'clock at night Eastern time. We've got Thursdays at 10 a.m. And we go through the strategy over and over and over again. So you learn while you earn with us. But if you just want to learn this and use it and not get signal sent to you, that's fine too. Take a screenshot of this, but this is how we search the market and find stocks poised to break out. And that's what we're looking at. So I'm going to add now another layer to this just to give you another sense of this. All right, so take a screenshot of this one too. So this is going to be looking at crosses. Okay, so I want to find the price crossing above the 10-day. So this is only going to pull up stocks in this list I'm going to show you of stocks today. Okay, this is today. That has above average volume. So this volume are liquid stocks. So I use 1 million shares or more. So any stock that I see here must have traded today over 1 million shares. On the right hand, you see average volume, 60 days. That means this trades on average 1 million shares a day. So these are very liquid, very liquid. I want to see only positive moves. I'm looking for buys. This is a buy setup. And then this section here gives me the last price. So the price had to have crossed up above the simple moving average 10-day. Okay, so this is how I'm finding these lists of stocks. So down here, this is the stocks that check the boxes. So look at the charts and tell me, are we at a point of a cross? See, here's the cross. All right, so this is Duke Energy. This is a Dow composite stock. You see the cross above? That's where I want to be. I want to be above, and I want to be at that moment of crossover, right? Now I have an ability to search. There's thousands of stocks. In TradingView, there's 11,000 stock symbols. I have a list of 29. 29. See the cross above? Here's Car Gurus. Cross above, right? Look at the charts. Look at that cross on the bottom. All sorts of prices. $2 stocks, $100 stocks. Every day is different. Zynga, $10 stock. IAA, $57 stock, right? But look at the break. Remember, I want to be at the point of reversal. at the point of reversal, there's JD, advertising company. See the cross above? OGI. Let's see what else is in this list. Every day is different, right? So doesn't matter how active or inactive you are. Doesn't matter if you like some trades, a lot of trades. You like $50 stocks, $20 stocks, $10 stocks. Every day is going to be different because we're looking at today, what took place and what checks the box. Some days are 70. I've pulled this list and seen 100 stocks that fit this criteria. So every day is different. So this allows the free technology, it's free, to do all the searching for us. Isn't that amazing? So rather than us going chart after chart after chart after chart after chart, trying to find these opportunities, I'm looking at a handful. There's 29. This is how long it takes me to go through it. Boom. I'm just clicking down, and I'm able to now to do several things. I could trade the stocks outright. I can buy the stock. We've got in that checklist that I gave to everybody, you have this whole thing here, right? This is the actual checklist, and it tells you how to set your entries. Now, everything below here is for my option traders. You like to trade options? This is how you select the option chain, right here. That's a bonus. People spend thousands of dollars to learn how to trade options, and with this checklist, you can go pick option chains, good option chains. Just follow in 4 simple steps. My stock traders, you stop there. The 40 trading checklist above that, candles above the moving average 40, bar volume column above the average. It shows you how to set the trade up, how to set profit targets using previous highs, how to use a stop loss using previous low. Okay, you can become an independent trader, I promise you, using this strategy. And paired with free technology, such as the TradingView site, you can do this also in Thinkorswim. I don't trade with Fidelity. I don't trade with Charles Schwab, so I don't know how their setup is, but I'm sure it's very similar to Thinkorswim, right? But you can now search through, because look what happens here. See, it says 29 here. If I take out these filters, you're going to see 11,641 stock symbols. And the magic question, remember, are those 3. What do I trade? When do I trade it? How do I trade it? Right? What am I trading? What symbol? What company, right? When do I get in it? And then how do I manage it? That's all you have to answer. If you can answer those 3 questions consistently and successfully, that is where profits are. That's where the profits are at. Okay, nothing more, nothing less. But that is essentially how this entire process works, up and down the entire line. Now, like I said, this by itself here is a phenomenal approach. It's been time tested. Been teaching this for a very long time now. And I've taught this using software, right? You had to pay for software that did all this heavy lifting. But I just found throughout the years that at the end of the day, much of what people charge and provide can be had. You can do this, and I hope this helped put it together in a way that allowed you to find them. Okay, so this strategy, you want to be conservative, then wait for the 50-day moving average. You want to be a little bit more aggressive, you can get tighter, use the 20, use the 10, right? Everyone's going to be different, but we teach this every single week on the different ways and the different strategies to deploy, because you can buy the stock, you can buy the option, you can do both, right? There's other ways to be a little bit more aggressive, there's ways to be a little bit more conservative. This is the basis. What I taught you today is the basis that we can jump on, okay, that we can use in the overall market together. So for those that appreciate this style, right, you'll have the recording as well, and you want me and my team to run trades for you, meaning we'll run this every day. We find, evaluate, and send to you. That by itself is worth its weight in gold. But like I said, it's only $3.99 for the year. But with the signal service, that also unlocks 2 sessions every week with me. I host them live. 7 o'clock Eastern time on Monday for about 90 minutes, minimum an hour. Most of the time it's 90 minutes plus, but I always love teaching and coaching, so I tend to go over time. So I do apologize. Nice motorcycle. And then we also host them on Thursdays at 10 a.m. So you're talking between the 2 sessions, 3 hours a week, included with the $3.99 with me. If you learned anything today, imagine having an entire year with me over 52 weeks, 3 hours a week, 1,500 hours. Can you learn this strategy while we deliver signals to you? I think it's a ton of value. Obviously, you can be the best judge of that, and that's what makes the world go round is value perception. So if you want to continue the learning process, or heck, if you just want us to send you signals, then you can do that too. All you have to do is go to thestockprofitgenerator.com. It's the link, and sign up and get instant access to all of our signals. And also get signed up starting Monday. We don't have a class this week, but starting next week, it's the only time of the year I am off. And start getting these signals emailed to you and text message to you every single day. So we typically send out 1 trade a day. We'll give you the stock setup. So we tell you what stock to trade, when to get into that trade, meaning the entry price, where to take profit. We give you 2 profit targets, 2 profit levels, and then we give you a stop loss on every single position. Full transparency. You know exactly what to do. We'll show you how to set up pending orders. So all of our trades are set up to catch breakouts. So if you have the checklist in front of you, as you should, then you can see it says set your entry 1 tick above the bar high. So we send you all that information out. I sent you the link. So just go to thestockprofitgenerator.com and you'll have access to my classes twice a week, which by itself is worth well over the value of this program just by itself. But as a bonus, you're going to receive signals. How about that? So whichever way you want to quantify this value, we're going to provide it to you. So it's a very simple sign-up process. I sent you the link. Thestockprofitgenerator.com is this signal service. It's called the Cash Surge Attractor. Okay, so this is the program. It's daily signals. I run a weekly signal program with this as well, and that is a longer term program. This is a daily signal, so every single day you can get in. I use Thinkorswim, so I use TOS, Thinkorswim. We also include a copy of the trade ticket, so you can see exactly how we set up the trade inside of the signal. So to give you an idea of what and how we send these out, I'll give you an idea of the level of transparency behind these signals so you can see it. So nothing is left to guess, which I think is the most important step here. Okay, so we provide full transparency on these signals. I'll show you what it looks like inside of our membership area. So we track every single trade. And you have access to this membership site that allows you to jump in and follow along with our positions. So we tell you all of the necessary information. So this is what it looks like inside of our membership site. So when you're following along with our trades, we give you every single piece. Okay, so if you take a look here, here is NBI down here. You see this trade? So we sent this out. We send you the symbol to trade, when to get in. See, this stock is still active. It's up 44% at the time we updated this, 44% on the stock. That was in about 4.5 months, up 44%, just that one single stock trade. We give you the entry price to get in. We give you the stop loss. This stop loss changes. So we'll tell you, and we give you the updated stop loss that trails the market. We use objective stop loss placement. It's not a flat percentage. It's nothing like that. We literally look at the market, and based upon the price action, we'll say, here's another stock. If you notice here, the stop loss is at $8.96. We got into this trade at $7.48. So our stop loss is now $1.50 above the entry price. So if the market does reverse and take us out, we're going to be stopped out at profit. Okay, so this helps you to lock in profit along the journey. We give you predetermined profit targets so you know when to take profits off your positions, and we give you copies of the trade ticket. So here's a copy of the trade ticket. This is where we set it up. You can see the date was March 1st, 2021. We bought 10 shares, and you can see the trade. So everything's transparent. I've never seen a more transparent program out there, and allows us to really deliver appropriately there, right? But that's what comes into, that's what it looks like to be delivered signals. Okay, so inside of this, we have a full refund policy here. Okay, so it's a 60-day, 60-day money back guarantee. If for any reason you're not satisfied with this program, just let us know within the first 2 months. If you let us know within the first 2 months, we'll give you 100% of your money back. Theoretically, I know it opens up the door for people to come in, take our trades, and just walk away and get their money back. And, you know, like I said, that can happen. But for me, I want to remove as much risk as possible to allow you to get the help you came here for. You can get a sense for how I teach today. Imagine having 3 hours a week with me, running the program over and over and over again. I want you to do the most basic setup. As we start to progress as a group, then I'll layer in more advanced trading techniques depending upon your level of success and understanding, right? But this program is unique in the fact that we give you everything up front. You know when to get in, you know where to get out for profit, and how to mitigate risk. And there's nothing done behind the scenes where we're getting out before you get out, because it's all transparent. So the numbers are the numbers, the prices are the prices. You see them before you get in, and they don't change. Your profit target does not change. We have to do stop losses daily. Okay, so that way as a group, we're all following in step together up and down the line here. So this is stocks only. I'll teach you how to trade options, how to pick option chains if you want in class, but these are stock signals. So we give you stock name, we give you the company name, right? We give you every piece of the puzzle. You set them up at night. We send these out between 7 and 8 o'clock at night. So you have the entire evening and the morning before the market opens the next day. So for example, here in about 2 hours, my team and I will start to go through and run our signals, meaning we'll go through and start analyzing the market. And then once we find them, we send them to you tonight. Then you have all the way from tonight until tomorrow morning before the market opens. The goal is that you set these trades in your account the day before the market opens. All of these orders are going to be set up to trigger automatically for you. You set them up in your account, and if the prices hit, you're in. Okay, so for example, this is what it looks like. So remember, the stockprofitgenerator.com is the URL to go to sign up. Okay, I'll put it on the screen in a moment just so you can see it. But the stockprofitgenerator.com is how you sign up for the signals. Okay, that's our stock signal program. And then I'm going to show you what the entry look like. So this is the site. You can write it down. You can go there now. It's up to you. It's right here on the screen. Okay, I just wanted to put it there in case you did not catch it. The stockprofitgenerator.com will take you and redirect you to our checkout page. This is a shorter URL to mess with. Okay, the stockprofitgenerator.com. Okay, so let's jump over here. Let me show you this. The beauty of this is that everything is set up in a manner that allows you to set them up and walk away. Okay, you don't have to be in front of your computer to execute this trade. You're going to set a pending order, okay, a stop limit buy order. So for example, if we're looking at Car Gurus and I'm following the checklist, here's the high. You see that the high is 27.40. We're going to set a stop limit buy order for tomorrow to only buy shares of Car Gurus at $27.41. $27.41. If the market retraces tomorrow, doesn't come up and hit our entry, we're not in the trade. We only want to be in the trade if we get the breakout. The breakout is confirmed when the price actually goes higher, right? Don't make it complicated. It's simple. If I want to catch a breakout, the final confirmation of a breakout is price goes up. So that's why we use these pending orders. The other benefit of the order, the way we teach you, is that you don't have to be in front of a computer hitting enter. You have plenty of time. You have over 12 hours to set up the trade before the market opens the next day. That's the best time to do it. Of the signals we sent out, I will tell you, just use this link. If you're getting a pop-up block, just go to our direct link. We sent you the link here. Use this one. This is the direct checkout page link. Some of you have higher security levels. That's great. This page is secure. So you can see here it says connection is secure. Here it is. So this page, I just dropped the link right here. See, it says connection is secure. Okay. Your information, for example, passwords or credit card numbers, is private when it is sent to this site. So this is Chrome. This is a Chrome secure connection. Okay. So we just dropped that link in there. And simple checkout here, right? 60-day money back guarantee, right? So let's come back here. So your entries are done in advance. We're waiting to catch breakouts. We're not trying to chase the breakout. Remember I talked about Yahoo Finance? We're not going to Yahoo Finance and say, oh, what's going up today? Okay, buy it. That's the last we want to do, because typically we see big surge, you'll see a test, you'll see a retracement. So we want to avoid the retracement. So by sitting on top, we're literally waiting for the price to continue going up, which is the breakout. Okay, so this may or may not be the trade that we send out tonight, but I just wanted to show you what it looks like on the execution portion of it. Okay, so we have tons of videos in our classes to show you how to set up trades. That's simple to do once you understand, once you've done it a couple times. Setting the entries up are very, very simple. Okay, that's the simple part, is setting entries. Yeah, I've got some questions coming in here. When do the trades send out? So the trades are posted. So we send you emails, send you the SMS with all of the details of the signals. Symbol to trade, direction, we're buying these. These are all stock picks, so we're buying these stocks. What price to buy, so you're setting your entry order. What price to trigger, we call them trigger price. Where's your profit target levels, and then what's your stop loss? Email and text messages. Okay, so both sides, email and text message. You can just trade off that, or you then can log in to our membership site and get the trades there. Okay, so it's up to you how you want to do it. Between 7 o'clock and 8 o'clock at night, Eastern time, we send them out. So you have ample time to set them up. The majority of signals trigger within the first 5 minutes of the market. I would say 70% trigger within the first 5 minutes. I would say 85% trigger within the first hour. So the majority of signals happen with the first hour. And if you can't be in front of your computer hitting the go button, there's no better way to trade than this. I trade this way. I don't sit in front of the charts and smash my keyboard and get into positions. I am waiting for the market to come to me to the price I want to buy it at. Okay, that's how this process is. Okay, so to me, it's more convenient. It's less emotional, lower anxiety, is to set up trades this way. Following the checklist is exactly how we follow these signals. So it makes it simple to manage, and you've got 60 days to go through it. I mean, you won't really know till you get it, right? But 60 days, you imagine a trade a day. That's ample enough opportunities to see if this is going to work for you for such a low price of $3.99. The only reason we're able to offer it that low is because we have hundreds of people that subscribe. So it just, we're not trying to build an army here. You know, so it's a way that I like to teach. So you have what I teach. I went through it all. If you like it, then work with us. If you don't like it, or if you want to do it yourself, then that's fine too. I do appreciate it regardless. Appreciate the feedback. Appreciate that comment. Yeah, we'll send you the recording. Yeah, no worries. Do I trade CL? You're talking about like Colgate CL? Oh, oil futures. Or are you talking about Colgate? Which one are you talking about? It's applicable no matter what you're trading. This strategy of combining volume and trend direction and pending entries is what I use everywhere. Yeah, every single market class, cryptocurrencies, same process. ETF, same process. Futures, same process. I don't use a different strategy for a different market. Markets are markets. Price action is price action. Direction is direction. Doesn't matter what symbol this is. I could have any symbol. I have A, B, C, D, E, F, G stock. And if it has price, and if it's driven by trading activity, then I could show you direction. I could show you entries. I could show you exits. You got questions on weekly options? I'll show you how to do weekly options, right? So, I mean, it's all applicable. The first step to trading options is finding the best stock to option or ETF to option, like the SPY. SPY is heavily optioned. One of the most liquid options traded is around the SPY. You know, so this becomes, I know it's crazy to sound like, but a Swiss knife for your trading. You don't have to learn 50 techniques. You need one. You need one to be successful. Have you ever noticed, I know many of you are seasoned webinar watchers, meaning that you stay on top of the market, you know, you get an offer, an email that says, hey, take a look at this new strategy by XYZ person. You know, they're going to give you a huge pedigree list of success they've had, blah, blah, blah. Come find out about their strategy. Have you noticed that they all trade one way? Every trader, I know many of the top traders in the business, very close relationships with many of them, and they have found a success in the way they trade. And they, just like any person would do, is they have success, they stick with that. That's what you need to do. You need to find that one strategy that resonates, that's logical for you, that makes sense. And a bonus is if you can see yourself working with that person, right? If you have the same type of personality, if you like the personality, if you like the way they teach, if they like the way they explain things, the strategy they use works. The strategy that I show you today works. You can see some of my fellow gurus that they call themselves or experts. What they do and how they trade works for them. It's almost indisputable. I mean, sure, there's charlatans out there, people that say they make money, say they have success, and they don't. I mean, unfortunately, that's in every industry. You know, there's restaurants that say they have the best pizza in town. Doesn't mean they have the best pizza for you, right? Or the best tacos in town, or the best, you know, hamburgers in town, or cheeseburgers, right? How many advertisements do we see about the best cheeseburgers in town? I mean, my sister's in Bremerton, so I'm in Bremerton, Washington right now, and I did a research on restaurants, and I found 5 best pizzas in town. 5. I thought the best was 1. Right? But for me, I just find that personality is important of your coach, guru, how well they can explain complex to make simple, because ultimately they have something that works. The key is, can you do what they do? You know, can you all do what I've done today? I think I can help you there. I've done it so many times, but it doesn't mean it's going to work for you, right? So that's why we have the 60-day guarantee. The price for anyone in this room is less than what you invest per trade. Imagine getting 52 trades a year. More than that, you're talking 5 potential trades a week times 52 weeks. Sure, there's some downtime, so let's say it's 50 weeks with the holidays. That's a lot of trades. It's 250 trades. For $400 a year, you're talking $1.25 a trade or something like that. I mean, give it a shot. If it doesn't work, get your money back. If it works, go tell your friends and family about it. I'd appreciate the referral, okay? But think about it, $1.25 a trade recommendation, a trading signal. That's less than what you pay per trade at Thinkorswim. I know because I trade there, all right? But other than that, it's fairly simple. So I do appreciate the comments. Yeah, they'll be open through the rest of the week. So if you need time, think about it, think about it. If today's not the day, that's fine too. When that time's right, we'll be here for you. Okay, I'm beyond the days of heavy sales pressure, heavy marketing pressure to accomplish your success with you. Okay, so if you like it, bookmark us, come back to us whenever your heart, whenever you reach your heart's delight. Okay, so we'll be here. The only thing is the opportunity cost, of course, but hey, there's never a better time than when you're ready. So I do appreciate everybody. You'll have the recording out shortly. It'll probably take a couple hours to render because we went 2 hours today, which is, hey, when you're having fun, why not? So I do appreciate it, everybody showing up. Great questions, great interaction. The link to sign up if you want to sign up is in the inbox. Appreciate everybody. Thanks for the comments. Yeah, I'll be traveling. This is the first time I've traveled. Longest drought, because I hit the road a lot, different speaking events throughout the year. Typically, I'm on the road at least 12 to 15 times a year at an event. But since COVID, obviously, we haven't done much of that. So much of my time's been on webinars like this. So I do appreciate the time. It's fun to interact with people like yourselves. Same mindset, same, common goal, which is always fun. So I do appreciate you all. Wishing nothing but the best. Happy trading, and I'll see you again at our next live event.